this morning in the room. I'm Larry Conrath. I'm Senior Vice President and Regional Segment Leader of our Global Cannabis Practice at Hub International. For those of you that don't know Hub, we're a full-service global insurance broker with a number of specialty boutique practices. My particular background and my kind of relation to the panel here today is my work in the complex and transactional risk space, dealing with coverages like D&O insurance, transactional risk, reps and warranties, cyber, tax insurance, and the like. But we're really excited to get started here this morning. Our topic this morning is Cellar deals. I think I'm getting a little feedback. Mastering distressed asset trading. In this discussion, we will discuss the challenging capital market situation that cannabis operators have encountered since the early days of the industry, and it seems to have only gotten more challenging in the last 12 to 18 months. We'll discuss what's driving this market and how current investors and operators can best navigate these choppy waters. We will also discuss the opportunities for new investors into the space, as well how to mitigate the traditional and also very unique risks in this industry. I'm going to start off by just letting our panel introduce themselves, and I'll kick it off first with David.
Thanks, Larry. I'm David Traylor, Senior Managing Director of Golden Eagle Partners. Thanks, everybody, for coming to the event. Just a couple quick numbers about my firm. This is our 40th event that we've talked on in cannabis around the U.S., but also in Davos, Dubai, Berlin, Frankfurt, Grand Cayman, Toronto. I have 15 years biotech operational experience. We've been in cannabis for 10 years come December. We've been doing it internationally for 8 years come January next year. We've had cannabis clients on 6 of the 7 continents. I think you can guess what the 7th continent is. Right now we have clients with operations in Australia, Germany, US, Canada. And one thing, and thanks for showing up, one thing I also just wanted to say real quick, because I'm going to also weave in some hemp or THC minus. So being a biochemist by background, we look at cannabis as the whole thing because it's the genus. So we call it THC plus and THC minus. So I'm going to weave in some of that for the distressed asset panel. Thank you.
Good morning, everyone. Thank you for the intro. Ooh. Is that better? Okay. I'm Janet Jackim. I'm a cannabis business lawyer. 10 years experience in cannabis full-time, 45 years practicing law. And I know the joke is, Scott, still trying to get it right at 45 years. Cannabis is a particular love of mine, particularly as I get older and I need some of its remedial benefits. And I thought, wow, this is a great opportunity to get into at an early time. And sure enough, today I'm with Zuber Lawler. We have offices across the country, approximately, I think it's 7 now or 8. And about 30 lawyers doing cannabis intellectual property. My specialty is M&A, workouts, and restructuring, and real estate, and lots of litigation, I'm sorry to report. Thank you. Thanks.
Thank you. So, are
you on?
Am I on? Can you hear me?
Yeah.
My name's Michael Hogan. I'm with Armanino. Armanino, top 20 tax audit consulting firm, national practice. I'm a partner in the corporate finance and restructuring group. So we work with challenged companies that are across the spectrum, but a lot in cannabis. And also Armanino has a full service cannabis practice. We do tax audit consulting, the whole thing for all of that. So that's our history. Excited to be here. It's an interesting panel. I've gotten to know everybody beforehand, and I think this will, hopefully people will really enjoy this today.
So my name's Scott Moskol. I'm a partner at the law firm of Burns & Levinson. We're a mid-market firm, mostly based in Boston. We, kind of like Janet, began our journey into cannabis in 2013. I started off my career as a restructuring, workout, lending, corporate lawyer, very similar. In 2013, we got our first cannabis client. It was to do a capital raise and do some restructuring of the cap table and the operating agreements and everything else. and then myself and my co-chair, Frank Stiegel, we jumped in wholeheartedly for a variety of reasons. Obviously, one is it was a market that was not well served by counsel at that point. You know, we were pioneers,
Yeah.
but also kind of like Janet, I have Crohn's, and so I actually have a medical card, and so I use it, you know, now and then to deal with the harsh impact of Crohn's. So just like Janet, not only are we counsel, but we're advocates for the medicinal quality.
Excellent. Well, thanks, everybody. I'd like to get started by opening up the panel to comment on the current state of the cannabis capital markets and the major factors driving us where we are today. I think everyone in the room is well aware of the recent HHS announcement and around descheduling and the Safer Banking Act, which within the last few minutes there's current developments, but we all know that we've seen these things happen before and obstacles continue to jump up along the way. Obviously, there's a looming government shutdown potentially in the next week or so, which is perfect timing for this industry, right? So hurdles obviously exist, but that said, we're not going to focus on that here today. I know a lot of panels will focus on the what-ifs around those potential developments, but we want to stay in the moment. And so I'd like to start by the panel giving their thoughts on the current capital markets, and how investors and companies stand today. I mean, wholesale prices are generally down, in some cases by a lot. Employment in the industry is down, investment is down. Public MSOs are consolidating shares because their prices have gotten so low just to stay listed. Here in Illinois, I think we all are intimately aware of the many dispensary licenses that were released with much enthusiasm, and of the 192 as of July, I think 27 have only been able to be opened. So beyond the potential regulatory developments which may help, do you see any other light at the end of the tunnel? And but keep in mind that light at the end of the tunnel could be also the freight train barreling down the tracks at us as well. So what is your outlook? Where do we stand today, and kind of where do you see the future? David, maybe you kick things off.
Yeah. Thanks, Larry. So from my perspective, certainly being an investment banker, we've been in it 10 years also as chief business officer at Cerna. So we've seen a lot of, it was hard raising capital back then in 2013, 2014, but it's certainly, it's tougher now. My gosh. I mean, before the HHS, which I call the HHS effect, you had funds couldn't raise from new funds with LPs, private placements were tough, public companies couldn't raise, you don't raise capital when your stock's undervalued. So yeah, it's been really brutal, but I think one thing that and again, getting back to this THC plus, THC minus, I think there's also everybody sitting in this audience to try to say, okay, where are we going to come out on this? What's the future? And I think one thing you can do is if you look at the hemp industry, or what we call THC minus, that's been in a problem for like 3 years, right? We're starting to come out on the other side. And a couple just quick things, and I'll pass it over, that I think we've learned out of the hemp or the THC minus is the fact that those guys had a lot of what we call, distress. Distress we look at being caused by either internal problems or external problems, like external forces, changes in regulations, or internal forces like, if you know Mile High Labs going and buying a 430,000 square foot facility, which was complete crazy, right? So I think the one thing though, if you look at the hemp industry and what they've been able to do, or THC minus, two things. They've become much more capital efficient, and they've also kind of moved to evolve with the market. So if you see a lot of these companies that went out of business, like Mile High, they're CBD. A lot of the ones that are now really thriving, like for example, we have a client that's a hemp-based cannabinoid client that's killing it because they're diversified across molecules. So I would say, capital efficiency and diversification are certainly things that the THC plus market could look to get out of this capital constraints.
Any other comments, Mike?
Yeah, I think the challenge is, like everything, there are so many factors right now that are putting pressure on the marketplace. But there's always the opportunistic situation. I mean, there's always a good place for people that are, for well-run opportunities to find investment, to find all of that. So I don't think that's gone away. It's just that, everybody thought the markets were the rates were going to come back down. All of the projections, and we're just not seeing it. And there's nothing that's immediate necessarily. So I think it's going to be a long haul. And certainly one of the things that we talk about with clients is positioning yourself now for that long haul, or having done that before, as opposed to thinking that suddenly something's going to happen or change in the near term.
I might add, the way I look at it is that there's basically 4 different capital markets. One is the legacy market, which used to be called the black market. The legacy market has been around since, I don't know, Egyptians or so, a long, long time. And it's still there, and it's going to get grow unless we all figure out a solution, whether it's through regulation or taxation or it's law enforcement. I freak out when I hear from clients that they know that their worst nightmare in competition is the legacy market. The second market is the early adopters. California, Colorado, Washington, Oregon. These are states that are having huge issues. Dispensaries are just closing their doors because they can't even sell their licenses. And those are prime opportunities, of course, for the Cellar investor. A third marketplace are some states that are not moving much, like Texas. Fourth group, I think, is the states that are showing today the most promise: New York, New Jersey, Maryland, the Carolinas, Florida. And so that's where the capital is going now, and that's in part because they're new, as opposed to Colorado, for example, California, that are aged and aging, not very nicely, not very sweetly.
But I also think, I mean, what we're talking about here isn't just yes, cannabis has unique issues. Obviously, federally legal, you can't trade on NASDAQ, but this is a new industry, and all industries go through growing pains. And like we were talking earlier about the high tech in the early 2000s. I mean, how many remember MySpace? And they went bankrupt, and someone acquired the assets, and AOL, and you go on and on. I just see this in many ways as a natural business cycle, right? I mean that's what industries go through, and I think all of us as practitioners or participants in this industry have to stop mystifying, creating this mystery about cannabis, because it's a true business. I mean, we treat it as a true business. And I think along those lines, it's not the only highly regulated business that's out there, right? I mean, hospitals, nursing, the medical industry, healthcare. And I think once we start gnashing our teeth about 280E and just realize it's here, at least for the time being, and try to pay attention to the fundamentals, I think that will help the market. I mean, the market right now, the stock market, right, it bounces because rescheduling happens, or, well, eventually. Or I assume today all the stocks of the cannabis that's traded, the companies traded on a CSE or wherever, are going to have a huge bounce because SAFER came out of the Senate committee, which is great, but is that really reflective of the true value of the companies? And so I think that's something we have to keep in mind.
Yeah, maybe can we speak a little bit to the M&A situation in the market here today, and obviously, or lack thereof. Obviously, a number of stops and starts over the last couple of years, large acquisitions that have failed, that have been reignited. Janet, do you want to speak a little bit around
Sure.
that?
I have done probably 4 dozen M&A transactions, primarily in Arizona, in the cannabis space. I noticed Scott Greiper's Viridian chart in our earlier session indicated that there were 7 such transactions in Arizona in the last, whatever that reporting period was. Yeah, that's true, but 5 belong to one purchaser. So, I mean, some of the numbers on that screen may be discounted somewhat. But what I'm seeing is much smaller transactions, and Typically, a small amount of cash down and lots of carrybacks. No stock at this point.
I mean, I think we're seeing opportunistic acquisitions by some of the smarter players, right?
Yeah,
I mean,
yeah.
if you
And
have
money.
some cash, right?
Yeah.
I mean, you know, it's or able, decent enough balance sheet to issue some sellers, you know, promissory notes or whatever. I think, you know, people are buying, you know, trading up from a B property to an A property, using the real estate example. But I also think that people are, or buyers are looking at, you know, possibilities. We had a receivership in Massachusetts, and Merimed actually purchased the assets. And I think you're seeing more and more players realize that there are opportunities here. Now, the opportunities can vary, as we all know, and I think, you know, you have to do your due diligence. I mean,
Yeah.
there's a reason some of these companies ended up in a receivership, right? Because they can't pay their taxes or debt. But at the end of the day, there is value here. And I think
Yes.
as we keep talking about gloom and doom, we kind of, at least this panel, because I think we all believe in the industry, but we're all workout professionals, right? I mean, this is workout 101, right? I mean, how many times have you done this in your career?
And I think that's right. I think the fact is there's always going to be opportunity, and the smarter players right now are looking at this. I mean, you know, buy low, sell high. This is an opportunity to do that. I think the challenge, though, is one that the industry has overall, which you kind of mentioned before, which is that the fundamentals of the business,
Yep.
that a lot of the players that have been out there are not necessarily, it's still a growing industry, a changing industry, and so you have some of those, I don't want to say legacy players, because that's not fair, but there's a lot going on, and people aren't necessarily focused on that, and so if you don't have the time and all of that, you've really got to focus on a couple of your fundamentals right now. And if you do that, then you can find transactions. But I was in the hall earlier talking to somebody, they said, oh yeah, we got a book on this company, it was great, we looked, we loved it, we went there, everything was wrong. And so we ended up doing the deal, but pricing was obviously
Sure.
impacted.
I mean, that's why you have due diligence, right? And,
Yeah.
and frankly, due diligence, just looking through the financials, not enough.
Right.
You got to do the
Right.
site visits. I mean, we've all done that as well.
Interview employees. So I've told a story about this before, that client ready to close on a transaction in New Mexico went to one of the stores for the final inspection and walked into the store, and the manager says, hey, this is great. I really appreciate you coming to the store. By the way, I own this company. This person's name never came up during the due diligence. So thank God we caught it at the last.
Well, did he really own it, or did he think he owned it? Actually, I should say.
Well,
Because that never happens in cannabis.
Well, so with regards to the M&A current environment, I think in getting back to some of these comments just now, frankly, I don't think we had a very good M&A market before. I mean, I've done 50, I don't know how many transactions, a lot in biotech, and frankly, I think a lot of, kill me for it, but a lot of the corporate development people in cannabis haven't been that good, and I can say that because if you look at a lot of the transactions, they haven't worked out, right? 70% of my deals that I did in biotech business development worked out financially and monetarily. But one thing I think, you know, this is like, what do we do panel, right? And I think one thing to put out there is that don't just think about M&A. So I did 22 what I call incremental deals when I was doing business development, non-M&A, right? With AstraZeneca, Pfizer, and the like. And there are opportunities right now. For example, we have one of our clients is talking to one of the MSOs to do like a co-development deal. We have one of our clients in Australia talking to an MSO to do a incremental deal.
Right.
And then the other thing is you guys ought to look at option-based structures. So we put out a proposal to a company. Their board wants them to sell. And we essentially said, you guys would be effing crazy to sell right now because you're undervalued. But if you looked at doing an option-based structure where you take in 20 million, whatever the number is, take a percentage of the equity, and then if you hit some certain milestones in 18, 24 months, when things maybe recover, why would you not do that? So there's a lot of transactional creativity you can do to get through this,
great.
and it's not just M&A.
Yeah, Yeah, and I want to pivot really quickly, actually, because I want to go to the other side of this deal, and those being the companies in survival mode right now. And you know, you might say in this distressed environment, the best sale that they could do is to not do one, right? So just looking at that specifically, what should current operators be looking at during these times with respect to operational restructuring? I mean, before we dive into the fixes, maybe we could just talk a little bit about the diagnostic side of the equation and what we might look at there. Michael, if you want to comment, please.
Yeah, I think as we kind of were, I mean, I think you've heard this already on this panel, making sure that you as a company have all of the right information, setting up your KPIs, getting systems in place, being able to do that. There's nothing worse that you can have than basically going to the first meeting and producing information that's wrong, because basically you lose that chance and it's going to go away. So, you know, when we're working with clients, I mean, part of it is you shouldn't be deciding today about a transaction until you've done the other parts of getting ready for it, understanding what your business is, creating those metrics, being able to track it all, and also doing things like, you know, potentially doing Q of E beforehand, doing that quality of earnings review so that so you know what everything is, or doing evaluation so you can set expectations on your own. And then we get into the obvious, which is using that information to say, hey, maybe strategically for options, as you point out, options are the most important thing here. Pursuing multiple options, actually, instead of just doing one after the other and inevitably running out. And so as you're looking at those, I think the important thing is there to be looking at those options, but to be able to have thoughtfully put it together so that when you're going out there, you're ready and you're presenting the best self forward for the company.
But I also think, I mean, yes, 100%, right? I mean, I think people need to stop thinking cannabis is unique. So in the workout world, right, how many times, this old adage, our clients always call us 6 months too late, right? I mean, how many times have we said that? And that's because they always think, oh, well, 420 is coming, I'm going to sell so much money that I'm going to be able to pay my taxes. Well, guess what? You aren't. I mean, maybe you will, but that's not a business strategy. Or a restructuring strategy. 280E is going to go away now with rescheduling. Maybe it will, maybe it won't, but that's not a true operational, that's not a strategy. Maybe you'll get some more cash flow, maybe you won't. It does, but that just hides the issues with the company that these folks need to address, like corporate governance. How many times have we done due diligence and never mind board votes to do anything. There's no operating agreement, or it's like 3 pages, which doesn't make any sense. You know, I think from an operational perspective, just like any other business, you know, I mean, layoffs are part of business cycles, and do you really need everyone there? Or do the principals, how much money are they taking out in a salary? Yes, it's great, but this is your business. If you're a principal, like you probably own together 50 to 60%, probably, hopefully. And yeah, you think, oh, I should get $500,000 a year being CEO, but if the company can't support that, you're just driving your company further and further into the hole. And these are the types of, I think, this is why you need to hire the professionals like Armanino.
Well, and I think just as a quick point, I think why that's important, because the objectivity that you need, which is as you're looking at the options and being able to really assess them, some of them are just because we did something before, you know, we bought this business or we did it, maybe it's the right time. You got to look at everything objectively to be able to say, hey, maybe just because it was the right thing before, let's get rid of it. Let's carve that off. Let's keep the core here. Let's do what we do well. Where are we making the money? What do we do well, as opposed to just saying we're going to do a little bit less of everything? And I think that's the hardest part for people, because you got to step back and look over the top
And
of
I
it.
think you also have to adapt. So like 4 or 5 years ago, right, it was the land grab. We got to get as many licenses and brick and mortar. And then people realized, well, that's kind of expensive, right? And or applying for all these licenses, and there's all these regulatory hurdles. So now we're into, you know, production licensing or manufacturing licenses being like the hot thing, because we're all going to create brands, right? And I think that is a valid strategy, but not every cannabis company can create a brand. So I think you have to look at what your strengths are, like you said, but you have to be willing to adapt and be nimble. And again, I'm not saying anything that any of our colleagues who aren't in cannabis wouldn't be saying to their clients.
Well, you're talking about you guys are talking, well, right now we're talking about analytics, right? Where you look at two things that we think are key for both investors and operators to try to figure out to get through this situation, because as we recommend to our clients, don't sell now. I mean, make it through this, because if you make it through this, everybody else goes out of business and you're valued that much higher, you have more market share, right? So one thing I got quoted on right before the pandemic, in Bloomberg, there's been too much arrogance and too little humility in this industry. So get rid of the arrogance, stick your pride in your back pocket, because I'm sorry, but Canopy Growth blew through $4 billion, right? Everybody thought growing weed was going to be easy. The other thing is focus is critical. I worked in Silicon Valley for leading biotech companies for 8 years, and one thing you learn in Silicon Valley is there's a lot of opportunity, and that's what happened with this company called Affymetrix. They were the leading genomics company, bar none. They were defocused all over the place, and guess who? Illumina ate their lunch. So get some focus and stick your pride in your back pocket, and you can probably get through this.
Yeah, I want to move on to the unfortunate reality of, okay, we've moved past survival, and now it's how do we preserve the business? How do we preserve the assets? How do we work through this? And if let's say you're a secured lender in the cannabis industry, Janet, can you speak to what leverage you have to pull, what recourse you have for a failing operator from an investor standpoint?
Well, it's most important that you have your collateral in place, that you understand what's there. You should be doing inspections regularly. You should be identifying, for example, material equipment parts, taking photos, preserving that kind of record for future use. You should be confirming that you have a secured interest and that it's been recorded and filed, which means perfected, so that if the situation gets worse, you can do a foreclosure. And keep in mind, there's not a bankruptcy option for your borrower, at least not at this time. So you can proceed with noticing up, for example, a fixtures sale, which is in most states is very easy to do and quick. Or if you have real estate, God love you, because that's even better. You tee up a mortgage foreclosure or a deed of trust foreclosure. And I'm hopeful that you have, as a secured lender, taken a security interest in the cannabis licenses that exist, understanding that since there's almost no case law on this matter, and notwithstanding that many cannabis regulators take the position that licenses are not transferable, you may be able to make case law and convince a judge or a receiver that you do, in fact, take a security interest and you're first in line and you can foreclose on the license.
But on that end, not every state, and I know, is the same. So
That's right.
We have to drill down, or you as a secured lender should drill down on the regulations, and we know regulators like to change them like every 6 months or a year, it seems like. But some states, the codes or the regulations or the law specifically state a lender cannot take a lien on a license, right? It specifically states that. Now there's ways to kind of get around there with collateral
And we do
assignments
know
and
those ways.
right, but still, it's much more difficult, right?
Yes.
Or in some states, you have to get permission from the regulators.
Right.
Why? I don't know, but regulators
Well,
like to do that.
replacement, right? Replacement of ownership is the issue with the regulatory agencies.
But I also think, and I know I'm going to get in trouble for saying this, but that never stops me. I mean, from a distressed situation, I think, and I know I'm going off topic, but I think that the regulators in some instances I know they say, oh my God, the industry, it's because of the big bad MSOs or all the money people, but they have to look at themselves because oftentimes they're creating a framework that isn't really helpful for the businesses from a business perspective.
Regardless of
right?
size.
And or they're creating rules that just come out of nowhere. So for instance, in Massachusetts, we have a rule of 3. You can only have 3 adult retail dispensaries, right? Well, in most industries, as they mature, there's consolidation. But and I know a lot of states have concentration limits, but if you have limits, that level of consolidation can't occur. And that's like all these mom and pops who had a dream and that couldn't get funding or couldn't do whatever, like they can't sell their licenses because in many of those states, most of the MSOs have come, they're at their cap, maybe they're going to trade a B for an A property. But that creates part of this distressed situation that we're in.
Yeah, I think the one thing, though, is that we all know from the restructuring world, which is if you can do the out of court, if you can do things beforehand, you know, if you're going to be buying these assets, obviously you've got to look and you've got to do the diligence. But if you can get all the parties together, I mean, the fact is creditors, vendors, they understand in the industry that they don't have a lot of leverage. And that part, and they're seeing it in other places as well. So if you can get, we've been able to recently do a deal where essentially we got everybody aligned, and that way you were able to transfer the licenses while allowing it to still operate, and didn't have to go through it. And it's going to end up being a more efficient process. And then on the back end, you can use some kind of insolvency, maybe a state level 1 or something like that, just to clean it up. But if you can do that and get, if you're going to buy it, walking in the first day and just saying, oh, I'm going to foreclose or I'm going to strong arm it, if you can quickly get people around the table to focus on it and build a path forward, you're going to end up with a better deal for everybody.
No, and going back to what Janet was talking about, Article 9 sales. So in most states, the licensee controls like the transfer application, right? The change of control. And so you normally can't do an Article 9 on the license. You can do it on the equipment, which may or may not have much value. But there is a lot of sense to try to work out a deal with your borrowers. Maybe give them a little bit something. Like, for instance, we're doing a deal in Massachusetts. It's a consensual Article 9. It's a private lender. We just got our regulatory approval because we worked out a deal. We treated our borrower with some respect, gave them, throw a little money at the principals because you know what? That's going to be cheaper than paying me to go through a receivership.
Sure.
Or Janet for litigation.
Since we've moved, I'm going to talk a little bit about one of the ways to assist cannabis companies in figuring out how they can survive. And I think the critical point is what you all were saying. It's really about renegotiating a deal. So if you're a company and you have a lease and you have a mortgage and you have equipment leases and other contracts, supply contracts, make a list of your top, say, 10 contracts, and one by one start renegotiating. Be honest, transparent, share your financials, and basically say, I need help. How are you going to help me? I have some suggestions, but understand, banker, private lender, etc., I'm going to hit the wall soon unless I can get some relief. Try it.
Yeah, it's a good point, Janet. I mean, one thing I learned early on in my career when I was a project manager, gave a big presentation, is that there's late data that came in and it was a surprise. So I think everybody on this panel and out there agrees the fact surprises in business are terrible. They're very bad. And to Janet's point, I mean, look at the regulators like the MED in Colorado. As a friend, I know it's hard to do, but I mean, I know a number of people in biotech that tried to pull it over on the FDA. That's never going to end well. So always try to get the surprises out of the way sooner than you can, and especially renegotiating. So great points.
Yeah, I know we're running a little bit short on time here, so as we close things up, before we do, I thought it's important to just really quickly also hit kind of the opportunities here as we're looking from a buyer standpoint. hate to use the term bottom feeder, but bottom feeders serve a purpose here. They're the grease that keeps this machine moving. It can actually be a benefit to all parties involved. So real quickly, just maybe talk about your thoughts on the opportunities for investors and maybe some of the red flags and things that they should be paying attention to as they work through it.
Real quick that I can add on that. I have a client right now that's looking to buy assets, and then they wait long enough, and it turns out they kind of go insolvent, go out of business, and then they end up getting the people, the really good people. And it's been a really cheap way to do it. So if you're talking about bottom feeding, that's the best way to do it.
Great. I think talking to the regional MSOs is an important play if you're interested in doing an investment in the Cellar. The regionals are now looking for new opportunities to buy out, their brethren and sisters who aren't doing so well, but perhaps there are certain assets like human or leases or facilities that could meld well into the regional MSO's operations. Talk to those people. If you have cash, they're pursuing those bottom distressed assets.
Yeah, I think we've been talking a lot about what companies should be doing. I think the other side of it is what should buyers be doing. I think the realities are, as Scott points out, every state is different. There are different rules, there are different aspects, and I don't think people fully appreciate it until they get a little bit further down, like ownership, some of the basics. We recognize that a lot of the sellers really aren't in good shape. They're not necessarily prepared. So you're going to have to go deep on your diligence, but you're going to have to look at things that you wouldn't normally look at, as well as financial, but operational, seeing what efficiencies they have in their operation itself, what decisions they've made strategically about building that business that were flawed, because you may want to cut part of it off, you may not need part of it. And I think that's the hardest part as a buyer right now, is it's not the same everywhere. And so really understanding that.
Yeah, I mean, know the regulations from each state in a transactional perspective, right? I mean, in some states you have to have your build out done before you can sell, right? So there's a different way to structure those types of deals. Maybe it's a convertible debt, but basically the ones with money have to fund the build out if they want the license and the property. Also know how long is it really going to take to get your regulatory approvals. So in Missouri, from what I understand, and from some clients, they're backlogged like almost a year because they have a 3-year renewal process. And so as a result, like I've had clients who have change of controls or transfer applications months and months and months and months, and basically they're told, well, we're in a 3-year renewal process, so just wait your turn. And I think so buyers really need to recognize that the day that they sign the P&S or APA or SPA, whatever we're going to do, I mean, it's going to probably be at least 2 to 3 months before you close. It could be a year. And what's going to happen between the time you sign the agreement and when you close, and make sure whatever type of legal documents that you're drafting have some controls in there. Material, adverse effect clauses. I mean, we're all used to those, but if you're going to do a sign and close, you're going to sign and then close like 3 weeks later, which is non-cannabis M&As, all the time happen. That's different than a sign and close 6 months later. And so MAE, you've got to really think about and also put the proper teeth, because you don't want to buy something that 6 months later has just, paying $10 million for something that's run into the ground. Because that never happens either, right?
Well, thanks. I know we could all probably sit here for another hour. I want to be respectful to the next panel, but thank you all for participating and listening in this morning. Panel, appreciate all your thoughts, and I know we'll all be around the conference here. Welcome meeting and speaking to you further on any of these topics as the conference goes on. Thank you.